Hi and welcome back to Siren Crypto. I'm Becky, and in this video I'm going to explain how double tops and double bottoms work and how we can use them to try and profit from short and mid-term trades. I thought in this video we would go back to a chart-based approach to the markets. Specifically, let's start looking at patterns. The simplest ones to cover are double tops and double bottoms. They're really just variations on the whole support and resistance approach. They are really simple patterns to spot. So let's get straight into this and take a look at the theory, the textbook approach to these sort of patterns. Firstly, here's our disclaimer. This tutorial is for educational and illustrative purposes only. We are not responsible for any investments made applying this information or buying or selling recommendations. Siren Crypto are not licensed investment advisors. We make no recommendations to purchase or sell any kind of coin, option or security. Any investment contains risk and is 100% the responsibility of the investor to assess the risks and rewards involved. Trading the crypto market involves a high degree of risk, and you may incur financial losses if you engage in this activity. We at Siren Crypto take no liability, assumed or implied, from your application of the information we share within our training programs. Now here's our theoretical market. The market has been trending higher and everything looks okay. And then the market maybe does something like this. It doesn't break those old previous highs, so this is maybe the suggestion that we have a double top starting. However, the big level to watch is that old support. I've marked it on this chart here in green. That previous low. So it's what happens here that dictates, do we have a double top? If the market moves down and breaks that, then this is the sign that we have a double top. The market pushed to a high, then slid, which is pretty normal in an uptrend, pushes higher again, but doesn't take out that previous high. Then actually breaks that previous low. This is possibly a sign that sentiment is changing in the market. So from a textbook point of view, the signal to sell would be here where indicated on the chart. Now what people also do who use double tops is they will look at how high that pattern was. Let's say that was 5% high, and they would expect the market to drop at least, let's say, 5% after the break. So there's our textbook example of a double top. Not surprisingly, a double bottom is the mirror image of this. Let's take a quick look. So we have the same thing happening but in reverse. The market has been sliding, lower highs, lower lows. So it's a weak market. It hits a level, rallies and pushes down again. We were expecting it to break through all those lows as it has been doing all the way down. But something changes, we see buying come back in, and this does become previous support. So again, the level to watch is that old high. If the market rallies and breaks, then that's our double bottom. Once again, if that's, let's say, 5%, then people who are trading off these patterns will look for the market to move 5% at least from the point of the breakout. Well, that's the theory of how double tops and double bottoms work. However, in the real world, it's never quite as clear-cut as the theory would have us believe. Let's take a look at a couple of real markets, a double bottom and a double top, and how we could have traded them. Let's take a look at QTUM paired with Bitcoin. I'm looking here on a 4-hour chart. We can see that the price was in a decline. It slid from 2997 Satoshi to 2185 Satoshi. You can see it starts to get interesting. We had seen it slip to fresh lows, and maybe this is the sign of things changing. Maybe we're seeing potentially a double bottom. I've highlighted the lows here in green and the highs in red. This is what needs to be broken to complete the double bottom. We have 13% or so bouncing around in this channel. If it breaks, we could be looking for a similar size move. Let's jump forward in time now and see what happens next. Well, here's the break. This previous level that had been a problem, we see the market push through it. That is the completion of our double bottom. The ideal target, as we know, was about 13%. Here we made about 6%, which is still a great gain. This is pretty much a textbook example. They don't all work out like this, obviously, but it's a good example of how this setup did a trend reversal. Now let's take a look at this chart. This is Bitcoin paired against US dollar tether on a 4-hour chart. We see the price on a sharp rally. We see, a 15% move in the space of about 4 days. So we may think, well, actually, maybe this move has gone too far. We've seen the market sell-off, rally. Is this the start of a double top? I've picked up on the levels here on the chart for you. So now let's jump forwards and see what happens next. So the break of 8957, I've highlighted that here in green, would be the signal to sell. And we're looking for a move back down to at least 4%. If we jump forwards in time, interestingly, that level has held. The market did slip a little bit lower, but the buyers came back in. The potential for the double top was still on, and it did have to break through 9324. But as you can see, we have to forget now the double top as the market moved higher. We can now fast forward in time again. It ends up taking a while, but we end up with the break. We have the market finally slip below that old support, so that would have been the signal to sell. You can see the support and the resistance and the break signals as the pattern has completed. We had there a couple of pretty good examples. You can see these patterns forming over all sorts of time frames. I think one of the problems of trying to trade a pattern like this is, where does your stop loss go? In the examples we looked at, they worked pretty well and we saw the pattern break and the market went the way it was meant to go. One of the frustrating things might be if you're buying into a breakout of a double bottom and you set your stop loss a bit too tight and the market backs into it and stops you out. Then it goes in the direction you thought it was going to go all along. That's one of the drawbacks. It's knowing where to place your stop loss. Maybe if you experiment with them and you can just see how you go. Now, if you like the idea of these patterns, you could try different approaches to using stop loss and find out if this is an approach that might work for you. Well, we're going to wrap this up here. That's it for this video. We have lots more to come in the weeks ahead. If you like this video, give us a thumbs up. Make sure you don't miss out on all of our videos by clicking the subscribe button. You'll get notified when our next lesson is uploaded. Well, I'm Becky. Thanks for watching Siren Crypto, and I'll see you on the next video. Happy trading!